if it comes closer to the rallies that we saw at the end of 23, all the way up to, call it, the middle of May, and then when the clock restarted, so to speak, in July, we had gold at 2,400 and it went up to 2,800. That's a $400 move of the smaller of the two rallies. So if we take 400 from 26, we do get to 3,000. But I think that this new call is pretty concise in terms of when we might hit 3,000. I wouldn't be surprised if it did take till the first quarter of next year, 2026. But I think we most certainly will test 2,900 at some point this year in gold.
The gold market is experiencing a period of consolidation as traders digest mixed economic signals, particularly from recent inflation readings. Spot gold, currently trading at $2,664.10 per ounce, remains relatively stable as market participants evaluate conflicting indicators about price pressures in the economy. While recent data showed weaker than expected inflation readings, the significant year-over-year increase in producer prices raises concerns among economists about persistent inflationary pressures. This dichotomy has contributed to the precious metals' struggle for clear directional momentum. GaryWagner, editor of the Gold Forecast, offers an optimistic outlook through the lens of Elliott Wave theory. According to Wagner, the market appears to be in the final stages of its current correction phase, which he expects to conclude within the year's first quarter. Following this period, he projects gold to surpass its previous high of $2,800, potentially reaching $2,900 in 2025 and testing the $3,000 level by 2026. Goldman Sachs has recently adjusted its forecast for gold. While the investment bank initially predicted gold would reach $3,000 by the end of 2025, they have now revised their timeline, pushing the target to the second quarter of 2026. Their updated analysis suggests a more modest yet bullish target of $2,910 by 2025. The precious metals' near-term performance continues to be influenced by movements in the US dollar and Treasury yields, which have shown recent weakness. Market participants remain focused on upcoming US inflation data, which could provide crucial insights into the Federal Reserve's future interest rate decisions and, consequently, gold's price trajectory. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
If you recall, I believe we did our last interview second week of December. And at that point, we were fully immersed in a correction. If we can pull up our daily chart, we had hit the all-time record high back in October, and we had this tremendous move down from 2,800 to below 2,600. When we talked last, we were looking at this move back up, what I labeled as a B wave. And I talked about the good and the bad. And in terms of the good and the bad, what I mean is I still believe that we are in a correction, although we are in the final stages of that correction. And the exciting part is once the correction concludes, and I don't see that taking that long to unfold. In other words, I believe it'll happen the first or second month of this year, March at the latest. Then we restart the clock in terms of our Elliott Wave count. And that means we will, according to Elliott Wave theory, take out $2,800 minimum by the conclusion of what we're labeling as the next motive or impulse cycle. In terms of what we witnessed recently that I found interesting is if you see this green candle that I'm pointing to, Friday, January 10th, and that's when the jobs report came out. And they were anticipating a fairly tepid report, 160,000 new jobs added to payroll, and it came in well above expectations. And that would typically be bearish for gold. But what we saw was gold actually moved up and moved above this upper level resistance line. I think what we saw was a delayed or knee-jerk reaction to the jobs report because yesterday we had that double-digit sell-off in which gold lost almost $40. And so now it's back within this compression triangle. My sense is that we could have one more move down this final E wave, and that could take us anywhere between 2650 and 2630. But after that concludes, we will then go back into our impulse phase or motive phase, and that will take gold higher as we move into the second quarter and beyond this year. Well, the last time we talked, I said that we would get a C wave down, and that could go as low as about 2,600. That's exactly what we saw. Mm-hmm. I would expect this correction to be shallower than the previous one. And the way that we want to look at it as a market technician, we've got a series of highs. We have lower highs, 2,800 here, 2750 here, and then 2714. We'll round it down to 27. So we've got a market that's got a series of lower highs, but we also have higher lows, 2570 here, 2602 here. And so what we want to do to confirm that the correction is over, we want to look at these price points, meaning 2575, 2,600 as major support.
GaryWagner's Elliott Wave analysis presents an optimistic outlook for silver, suggesting that the motive phase could push prices above $35 per ounce. While Wagner acknowledges that these waves' exact timing and structure remain fluid until the first wave completes its formation, the underlying analysis points to significant bullish potential in the precious metal's future movements. From a technical perspective, silver navigates within a descending wedge pattern, with immediate resistance near the $31 mark. A successful breakthrough above this level could indicate strengthening buyer momentum and potentially pave the way toward $32.55, where the upper boundary of the Ichimoku cloud presents additional resistance. Market sentiment appears upward, with buyers working to invalidate the bearish head and shoulders pattern that emerged on December 19th. This development signals improving market confidence, though maintaining support above the psychologically significant $30 level remains crucial for sustaining the current bullish momentum. Let's get back to the interview.
As long as the conflicts, the geopolitical conflicts, are still fully embedded in, and it doesn't seem as though they're slowing down when we look at what's going on in Russia and Ukraine. Russia's been devastated by the amount of troops they've lost. At last count, it was possibly as high as 500,000, but they are now bringing in the North Koreans. They have Iran manufacturing drones for them and China funding the war, because all of those countries believe that they'll benefit from knocking America down a notch in terms of its stability as a world power. And when you've got the kind of power that you could have, especially with China and Russia aligned, with Iran being kind of a proxy of them, and then South Korea coming in, you've got the potential for the conflict in Ukraine to accelerate rather than come to a peaceful resolution as we all hope for.
Right.
In terms of the Middle East, that is still, although it's gone out of the news cycle, it's still fully embedded, and it hasn't come really closer to a conflict than when they began over a year ago. And so those are troublesome problems. I personally see gold not only taking out 2,800, but my numbers have been about 2,900, with the upper level possible being 3,000. And what I'm basing that on is the various legs of the rally. Back in October of 23, gold was just under 2,000. And from there, it ran to 25.35. So it ran roughly $500. Then it entered a correction. The correction took it back down to about $2,380. And from $2,380, it ran to $2,800. So we saw a $500 rally, right, and then we saw a $400 rally. If gold, as I believe it could, trades as low as 2,600. If we add 300 to that, we're at 2,900. If it comes closer to the rallies that we saw at the end of 23, all the way up to, call it, the middle of May. And then when the clock restarted, so to speak, in July, we had gold at 2,400 and it went up to 2,800. That's a $400 move of the smaller of the two rallies. So if we take 400 from 26, we do get to 3,000. But I think that this new call is pretty concise in terms of when we might hit 3,000. I wouldn't be surprised if it did take till the first quarter of next year, 2026. But I think we most certainly will test 2,900 at some point this year in gold. Well, when we look at silver last year, it did something it hasn't done in a decade, which is really break above 30. I'm trying to compress it to bring in some data. So if we look at 2024 and if we look at 2023, you can see that silver was really caught in between $20 on the low end and $28 here. In fact, silver didn't break above 30 until April of last year. Then it hit a higher top at 33 and eventually hit a price point we haven't seen, I believe, in about a decade, which is silver at about $35. So I believe that silver has some room to the upside. We believe that unlike gold that is still in the midst of a correction, silver could have potentially completed the correction when it traded down $29 on the way down from $35. And if that's the case, we've entered what's called a new impulse or motive phase, waves 1 through 5. And typically the theory goes that at the conclusion of the fifth wave, and I don't have a time element, nor do I have specifics about the waves, because you really need wave 1, which we use as a benchmark wave, before we can be more decisive. But we should conclude above $35 an ounce when this motive phase completes in silver.
The current consolidation phase in gold and silver markets highlights the ongoing tug-of-war between economic signals and technical patterns. Both metals remain at pivotal junctures, with gold poised to challenge key resistance levels and silver showing potential for a breakout from its current formation. As market sentiment evolves, the interplay between inflation trends, currency movements, and investor positioning will shape their trajectories. How do you perceive the role of technical patterns in forecasting precious metal prices, especially during economic uncertainty? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.